So surprise, surprise, you can actually do digital assets and cryptocurrency inside of an IRA platform. There are certain investments that have existed in the code since 1974 for IRAs that you cannot use an IRA to invest in. So that's an easier list. There's only two things on it. It's actually just life insurance and collectibles. And I define collectibles as the show me assets. I might argue that in any given day, residential real estate as an investment has a much lower standard deviation, is much more stable and predictable than probably most growth stocks in the S&P 500. If you purchase a property using IRA dollars, it has to be a pure investment. So we recommend to folks that no sweat equity even. So even if you're handy yourself, don't do any of the work because you might personally benefit.
Henry Yoshida joins me here today. You can learn what his team is up to and leverage a code. So rocketdollar.com, and the code is REI25. Really appreciate your time here today, Henry. And we're going to be
Thank you
talking
very much.
about IRAs and a few other things. So this will be fun.
Yeah, and normally you think IRAs and real estate don't go together, but that's kind of been my world, and that's what we can debunk and talk about how those things work together for your audience.
Well, I would assume, and you can correct me if I'm wrong, is this kind of a form of a self-directed IRA?
I've used the term self-directed IRA too much just because it's a little bit of a misnomer, right? That really anytime you can make your own investment decisions in an IRA, that's kind of self-directed, but it has been the moniker and the name given in a technical sense to IRAs that allow you to invest in private and alternative or non-registered, non-public, non-stock bond mutual fund type investments using IRA and tax advantage dollars. That's correct.
Yeah, well, this is going to be a great conversation because I've talked to, and this is probably just because of in my own backyard, you have these experts, if you will, the money managers or what have you. And anytime I bring this concept up, they either don't know about it or that's the last thing they want to sell me.
Right. There's actually a reason. I used to work in that space for a very long time. So my background is not a lot of your guests, they come in, they're people that got into real estate investing. I'd probably say that I'm more the career financial services person who then got into creating digital platforms in wealth tech, specifically around the area I worked in, which was always 401ks, IRAs. So I can kind of maybe shed a little light into why that's typically not something that's either known widely among the financial advisor community or not pushed widely as well. So there's actually a reason for that.
Well, let's dive into that. What is the reason? I would imagine there's not a lot of incentive for them to
Yeah,
push that product.
that's exactly the reason. I don't think there's any negative consequences here. It's just that it's not a product that's in their suite. I mean, most financial advisors, even the ones that work as an independent firm. So let's just say it's named Henry Yoshida and Associates. It's an independent firm. It's actually they're still using a back end system that's usually provided by a bigger company. And they're a little bit pigeonholed by the products and services or the account types that are offered by that back end. And so, unbeknownst to a lot of people, actually, the two companies that dominate this space are actually Charles Schwab and Fidelity. So, most people think of them as you go yourself, you don't use a financial advisor, but they are actually large supporters of the financial advisor community. And their systems don't allow people to hold these types of IRAs that could do private and alternative investments. For me, that's actually one of the reasons why I started the company. I came from that side working at a Merrill Lynch, started an RIA, left Merrill Lynch, started the RIA, sold that. And then that's actually one of the things was just identifying a space where the big guys really weren't competing. They didn't care. Kind of a build where no one's looking. But I've done that now with two of them, Rocket Dollar being the second in the space.
Could you talk? You mentioned you sold one, but you're affiliated with retired.com. What's the relationship there?
So they are our parent company. So we're a part of them. Rocket Dollar is the wholly owned subsidiary of retired.com. And it was a strategic move for us. Retired.com is a bigger entity. So combined, we have two consumer facing products. The one I founded, rocketdollar.com, is private and alternative investments in an IRA platform. And then our sister company is called Bitcoin IRA. So surprise, surprise, you can actually do digital assets and cryptocurrency inside of an IRA platform. So we work together. Then the other stool of the retired.com conglomerate is actually our own trust and custody organization. So combined, we across both of the direct-to-consumer brands, we have $12 billion of customer assets under custody. We have clients and customers all over the United States, tens of thousands of them, doing anything from private investment in real estate on one end of the spectrum. I call that your tangible type of investments, maybe to cryptocurrencies on the other end of the spectrum, and everything private and alternative in between. So that's the nature of it. The prior one was sold and I did not stay on to be a part of that. But this one, we are part of retired.com, sold the company into it, and we continue to operate as a wholly owned subsidiary under that umbrella.
Sure. You kind of beat me to the punch. I was going to ask you, what are some of those alternative investments that people can use this platform for? Because not everybody on this listening to this, they might be looking to diversify their portfolio in some way. So outside of
Sure.
Bitcoin and real estate, is there anything else?
So there are a lot, and we actually have a tracking system. Since we own our own custody entity, we actually have really, really good data and exact percentages of what our customers do. So we know the dollar amounts and the percentages, but real estate is one of the major holdings, but there's different flavors of real estate. So there's real estate where you may actually go out and purchase single family residences outright as investments. So that's a direct purchase of a real estate. But then we also have people that will participate in real estate syndications or private real estate funds or so forth. And at that point, they're investing as a limited partner. So that's another big slice. The second largest slice of our customer base is doing limited partnership or partnership unit investments into someone else's investment vehicle that just happens to be private and non-publicly registered. So that could be the back end of it could be real estate. It could be just some other type of private equity. It could be a venture fund. It could go directly into a private, non-publicly traded company and so forth. So we have people that run the gambit, and then we have some unusual investments. It's actually easier. Usually the way that I talk about this is what you can not invest in. So that's actually the part that's codified. So for those people in your audience that maybe have heard the term self-directed IRA, it's actually more important to note that there are certain investments that have existed in the code since 1974 for IRAs that you cannot use an IRA to invest in. So that's an easier list. There's only two things on it. It's actually just life insurance and collectibles. And I define collectibles as the show me assets. So none of those, no vintage cars, no paintings, nothing like that. No collectibles like a Mickey Mantle baseball card or something like that. So crazy enough, but can be owned in an IRA. So show me assets and life insurance can't be held. So technically, any other type of investment, as long as it's an actual arm's length investment, so not connected to the person individually, can't be your own business, can't be your own house, can't be the car that you drive on a day-to-day basis, is allowed to be in an IRA. And the restriction actually more comes from the custody entity. Will they allow you to actually hold that in your IRA? And most of the incumbents, they choose to only allow public investments, whereas there are a specialized group of providers, retired.com being one of them, that allow you to hold private alternatives. So that's actually the distinction. The list is easier to do what you can't invest in versus what you can.
Well, now that you crushed my dream of cornering the Pokemon market, I'd be curious as to, I was looking through your website and I think I read somewhere about that. You mentioned that there's a significant amount of retirement trapped in public market securities.
There
And I
are.
was,
Yeah.
I'm sorry, what was that?
These numbers are large for sure. The amount of money is in these, not just public market securities, but overall in retirement accounts. So again, that's another reason why it made sense for us to start that business in this space.
Well, are you seeing any kind of trends regarding investment preferences by your customers?
The people that are coming to us, this is probably more of a macroeconomic thing. So I started my career and got into retirement plans by accident in the year 2000. So I live in Austin, Texas. I've been fortunate enough to be able to be here throughout my career, even though I've sort of worked in different places. It was a very tech heavy town in the year 2000. Internet bubble was bursting, and I happened to be starting as an advisor at Merrill Lynch, fresh out of college. Not a great environment to work with individual high net worth investors when the stock market was crashing. But I would say that the larger trend from that time on was that, and we definitely see this today, that just the amount of companies that are publicly available has actually shrunk quite a bit since the 90s. So a lot of people don't realize that we actually have 30% of the publicly traded companies that are registered and publicly traded now than we actually did 2.5, 3 decades ago. Unlike everything else that's gone up, and gotten larger, this market's actually gotten smaller. And then, of course, as we know, the stock market is really ebbs and flows based on probably the top 6, 7, or 8 firms. So right now, coined as the Magnificent Seven, used to be called the FANG companies and so forth, but they've added a couple different ones since then. And that shift has actually forced investors to get returns outside of the public markets. Just there's less supply. It's dominated by the largest companies, and investors are starting to look at other places to basically generate returns so they can save up for retirement, create an income stream passively, for example, through real estate. That's your specialization. And that's just the trend that we've seen overall.
Ask you, outside of the obvious, being able to invest in real estate investing, what are some of the other benefits associated with leveraging what we're talking about here today versus a traditional IRA?
Well, so the one of the benefits is that if you're a normal working American citizen, you tend to have a lot of money in these accounts, and they tend to have very good tax treatment, and you accumulate these. So I know that you've had a lot of people on. You've had one of our partners on. He talked about he was wearing a shirt saying he was successfully unemployed, which means he doesn't work for a company that provides a 401k plan and health insurance. But that's not the large majority of people probably listening to this particular episode or just broadly in America. They work for a company, they contribute to a retirement plan in the form of a 401k or like kind plan, depending on what industry they're in, and they accumulate assets there. And what we help them do is actually unlock those assets for investment purposes, whether that be to go into public markets or private markets. And once maybe you feel like you have an over concentration in public, you might look to steer some of those dollars into privates. So actually what we more think about is that we're just going to where the money is. US retirement accounts in total are close to $35 trillion. Of that subsegment, 18 to 19 trillion is IRAs. And then you go down one further, 401ks are actually 8 trillion of that. So 401ks usually tend to trickle down into IRAs. And then now you have a large swath of dollars that really are investing in the same S&P 500 companies for the large majority of those assets, because these accounts are typically provided by the incumbents. Now you have this even higher concentration. And of course, we know that the S&P 500 will go up and down on a daily basis based on the movements of mostly the top 7 to 10 stocks in it. If that makes sense. So that's just the trend that we've seen. So we just find that the customers, once they get to a certain inflection point or a certain portfolio size, they just get uncomfortable having everything kind of riding in one particular type. So they look to diversify, and then they start to seek out REI Mastermind, real estate investing, and so forth. But then the issue then becomes, well, I don't have the capital to get started in that. They tend to have capital if they've accumulated that. Let's say they're mid-career, changed jobs a couple of times. They actually have capital in these retirement type of accounts. So we're just basically providing access for them to get access to their demand so they can then invest in the supply, which is all the people who basically coach individuals on how to get real estate investment properties.
Right. As an American society, we've been kind of trained when it comes to IRAs and 401ks to kind of squirrel our money away, set it and forget it. I would imagine you have had to provide some education or information so that people are just aware that these options are available.
So we do provide education, but usually it's people that are actually seeking out private and alternative investments. For some people, that's going to be cryptocurrencies. For other people, it's going to be real estate. Other people, it might be private funds and so forth. Once they've kind of gotten to the point where they're comfortable with a particular private and alternative investment, we just help them match up that they actually have dollars that have very good tax treatment, that are already earmarked for long term, and can be used for no other purposes other than investment until past age 59 and a half, that they can now match up to go do some of these investments. So the education for us is usually at the point where they've already decided and researched or gotten comfortable with some sort of alternative and private investment opportunity. And then we just help them realize that they actually already have some capital to go do these investments, larger dollar amounts, somewhat with lockup periods and some illiquidity compared to public markets, obviously. But once we kind of show them, the education for us is just helping them understand that they can unlock those dollars. And then in our industry, we've done a technological way to actually make it even easier for them to access these IRA funds of theirs, to go into investments faster than any of our competitors. And there's kind of a unique product positioning that we do. So that's kind of our sort of contribution to the industry.
Be interested in understanding the user experience regarding that and how they can
Sure.
leverage those funds in various real estate investing endeavors. But before we do, I just want to remind everybody again, you'll want to head over to rocketdollar.com. That's going to be a clickable link in the show notes. Use code REI25 to get any special offer there. If you found the value in this episode so far, this show only grows if you share it with one of your investor friends. So I'm going to ask you to please consider doing that. And if you're watching us on YouTube, a like and subscribe goes a long way.
That's right.
So
That code, by the way, will give people $100 off of the sign up.
yeah, that's awesome.
Yeah.
So Henry, could you kind of give us a snapshot of the user experience here so that they sign up for this?
Mm-hmm.
You can start writing checks.
I'd actually say it's kind of a combination of both setting up an investment account and also setting up a bank account. So customers who use Rocket Dollar for real estate investment purposes, they open up an IRA. So that's pretty typical now, and people have probably done this now. So you go to rocketdollar.com, you can hit sign up. So we've gotten this down to just 7 digestible chunks at 7 pages with 6 clicks. You just provide your information. So no different than if you're opening an IRA at any other provider. And then once you basically hit open the account, we use that information to simultaneously open the IRA on our side, but we also open an integrated bank account within that same portal on your behalf as well. So they're signing up for one account, but they're actually getting 2. It's because once the bank account is created, it actually nests inside of your IRA and you have an IRA account. So after someone opens an IRA, you have to fund that IRA. There's only a couple of ways you can fund it. One is you can make a cash contribution. So for 2025, that's $7,000 if you're under the age of 50. And then the other way is that you could roll over dollars. So you could roll over from an existing IRA, the cash portion, or you can actually roll over an old employer 401k. So that's actually why IRAs have a larger amount of money than 401ks, because 401ks tend to be the account that you have with your current employer, but an IRA is typically held by an individual, and that's where you're transferring money into every time you switch employers. So people tend to have larger dollars over time in IRAs over 401ks. So that's why that delta between the 18 trillion and the 9 trillion exists in those accounts. Those are the 2 ways you contribute. And that money actually gets deposited into the integrated bank account portal. From that point on, you have the ability to send ACHs and wires to go into your private and alternative investments, similarly to how your audience may be investing in private and alternative deals or buying real estate right now. The only difference would be that it'd be titled as the IRA. So it'd be, for example, Rocket Dollar for the benefit of Jack Haas IRA versus Jack Haas writing a check through his LLC directly to go purchase that next property. So we try to make the experience, my job, our team's job is actually to handle the IRA, the integrated bank account. Your job is to go be an investor. So we want to mirror and make your experience as an investor or what very similar to how you'd be doing this with regular taxable money, but instead you could be using the IRA dollars, of which right now Americans hold $18 trillion in IRAs. You didn't ask directly, but that number that's held in non-private investments is still over 98.5%. So there's a large market for people to tap into these dollars to go do something. And when I say private and alternative, I don't necessarily mean crazy and risky. I might argue that in any given day, residential real estate as an investment has a much lower standard deviation, is much more stable and predictable than probably most growth stocks in the S&P 500.
Mm-hmm.
From
Well,
a
I'm
daily
sure.
movement standpoint.
Yeah. Well, I'm sure you have some insight regarding how these self-directed IRAs are performing compared to like standard. Like, what are some of the benefits here?
Yeah, it just depends on what people invest in. I mean, we do have people that are going into a private credit fund. So they're just looking for a steady rate of return that might be 200 to 300 basis points over what they could get in the prevailing markets. It's a private credit fund generating an income stream, let's say in the range of 7 to 8%. It might have more risk than a US Treasury backed money market fund that's available from a major brokerage house. But they're willing to take that risk for that extra 200, 300 basis points. So that person's, it's not fair to compare that against, let's say, the average return of the S&P 500. But we've had some investors that have done really, really well in their investments because, in particular, people that were buying real estate using our accounts in the year 2020, there was a real confluence of events coming together then, which was the pandemic and COVID-19 actually sent people home from work. Some of those people decided to leave work completely. Then they had access to this 401k that they'd accumulated for 15 years, rolled it into an IRA at Rocket Dollar, purchased properties at a low in the early 2020 timeframe, and they've since rebounded quite dramatically in terms of value inside of those accounts. So this is all with tax deferred gains. So people that had it in a traditional IRA or a Roth, they're setting themselves up really, really well. It just depends on what investments. Obviously, the people on our sister company side that made bets on the low days of a cryptocurrency have probably done very, very well. But the S&P 500 and the Magnificent Seven stocks have done extremely well. I think like what we do is we create an additional account that allows an individual investor to further diversify their overall portfolio by tapping into existing IRA and 401k dollars to maybe go into asset classes that, quite frankly, even financial advisors, not just average American investors, think are actually not even allowed using these accounts. And that's not true.
Well, you've already brought up the two things that we're not allowed to invest in.
Yeah.
Is there any other pitfalls or regulations that we need to be aware of regarding leveraging these funds?
I hinted at this just a little bit earlier, which is that what you do from an investment standpoint in your IRA has to be an investment at arm's length. So I didn't really go into context of what that means, but I just highlighted by saying that you can invest or use IRA dollars in a Rocket Dollar account to purchase your own property. It has to be a pure rental property. It can't even be a hybrid. So if you were to purchase a property to then run as an Airbnb, it has to be a full-time Airbnb. You choose not to use it for 2 weeks as a vacation home yourself. It needs to be really, really separated. So that there's a second caveat. It's called prohibited transactions. And I deal with this a lot. So I'm licensed in real estate as well. So I have a certified financial planner license. I kind of think about this from the financial side and also specifically from the lens of a real estate investor as well. If you purchase a property using IRA dollars, it has to be a pure investment. So we recommend to folks that no sweat equity even. So even if you're handy yourself, don't do any of the work because you might personally benefit. So if you're able to lay down flooring or put on a roof or completely renovate a home on your own, it could be interpreted as you're getting a benefit for using your IRA dollars to improve that property. So we tell people property managers are safer. Definitely don't rent it to anyone who's a one step removed relative. So can't let your brother, sister, mother, father up or your children live in that property and pay you rent if you own in your IRA. Ironically enough, I always throw in here that in-laws actually count. So maybe the government feels like you're not going to give them a deal. So you're going to charge them the full rack rate market rental rate if it's a mother-in-law, for example. So there are caveats, and we have a lot of educational information. One of the features is that people can learn about the accounts and open one and manage the account from in there. There's a whole library of information that can answer all these questions about what you can do, what you can't do, how our IRAs work. And having the direct bank account integration means that we are the industry's best at having this sort of open fund and invest in private and alternative investments using IRA dollars in the exact same way that you'd be making investments into real estate or other private and alternative investments with your money that's not in an IRA today.
So, with your experience now, you've been doing this for quite a while. Are you seeing any trends, or it could even be in reference to the economy and the disruptions we're seeing in technology right now? What are you seeing in the marketplace?
Well, I have a lot of thoughts about maybe how technology overall will change the way we live our daily lives from an AI standpoint, but that's probably not what you're asking me. The trends from an investment standpoint are definitely there. I did a feature piece for Kiplinger magazine just in early April. It came out. I wrote it in late March. So just to kind of do the time frame, Kiplinger asked me to write an article about how you might view and start to go into alternative investments as a part of your portfolio under the second Trump administration. And it's been pretty clear that he's become a more friendly president to the digital asset space. Secondarily, behind the scenes, he's also become a much more friendly president to sort of letting the markets function and getting a little bit out of the way. So specific to real estate, I think about this too. He toys around with maybe releasing from conservatorship Fannie Mae and Freddie Mac, which is a big backbone of the United States real estate market. The government actually owns warrants to hold 80% of the stock of those companies. And so if he releases that, then now the government's no longer the conservator and owner of that. But those kinds of moves tell me that he is open to understanding that people need to go beyond these stocks and bonds to be able to really have portfolios. And at the end of the day, it's like whatever you think of our current administration's president, made a lot of his wealth in private and alternative investments. So he's a business person first who became a two-term president. And I just think that the signs, and I wrote about this in the article, kind of point to they're paving the way for you to be able to have more access to private and alternative investments. And then the last part of this trend are that your incumbents are actually taking big steps to get access to private investments to then now deliver them to their millions of customers. So Vanguard has recently inked a partnership with Blackstone's. Vanguard is maybe the brand name in passive investing in stocks, bonds, and mutual funds. Blackstone is a tier A, most famous private equity firm, and they're doing a partnership together. Edward Jones is a financial services firm with offices all over America in strip centers, and they're also creating alternative investments marketplace. So their advisors can then talk to their clients to do this. So these worlds of stocks and bonds and private investments used to be very separated, but now they're coming together. So I think to answer your question about the trends I'm seeing, there's clearly interest from the traditional incumbents to make private and alternative investments available to their customers. And it could be for a number of reasons. There's a money opportunity there. I like to think that it's actually because they realize that you need to go beyond the 60-40 stock fund portfolio to really help someone get a sustainable retirement income stream and a retirement account balance for the next 30 years. You can't just set it and forget it. That may not work for this generation next.
So I got a lot of people that are kind of new to investing. What type of advice would you give those young people or somebody who's new to this kind of concept? Where should they start, or do you have any advice?
Anyone who is 29 years old would tell their 20-year-old self. Anyone who's old would tell their 23-year-old self that you start with regular, consistent savings on a monthly basis into an account type where you don't get your returns eaten away by taxes. So this has nothing to do with IRAs or self-directed IRAs. It's just smart advice that the earlier you start putting some money away, you accumulate a pool of capital. And maybe you go into investments that are allowed when you're first starting out. But you'll find that at some point, if you're consistently doing this over time, and it's like a lot of things, like exercising too, you don't basically see results on day one. If you're consistent with it, you make small incremental gains. And 5 years later, you find yourself in great shape. For example, same thing with investing. If you make small incremental investments over a sustained period of time in the right account type, you're going to have an accumulated pool of capital. And if that capital is large enough, you'll then find the need to diversify that outside because it's become a large pool of capital. And hopefully for you, one of those things might be to go into something like real estate and tap into those funds. And if inside of an IRA, you can use our account to do that and go into something beyond what maybe you did in the beginning. It's just like, again, working out, same thing. You may start with just basic walking 8 to 10,000 steps a day, but as you get into better shape, you might need to layer on something a little bit more advanced, add strength training. So you start going to the gym a couple of days a week. Well, in year 3, you're probably going to need to have a structured strength training plan and more targeted cardio and so forth. And then by the time you're in year 10, you're going to need advanced tools and advanced procedures and protocols to keep advancing from that point on. The same thing you did in the beginning won't work after you become an expert. The same thing you do in the beginning when you have no money won't work when you've accumulated capital in these accounts. And that's where we come in. We're not a starter account. We're the type of account that a lot of people are finding when they've found that they've gotten to that advanced level and they need to do something beyond stocks, bonds, and mutual funds and bet it and forget it.
Would you mind sharing a little insight regarding, is if you're not putting this capital to work, is it earning anything? How does that work?
Well, I've kind of found that, let's say the younger generation, because I spend a lot of time in the personal finance space as well, that younger people don't tend to just have the money sitting around and not earning a return. It tends to get spent and go away, right? It kind of eviscerates.
Mm.
But I just think that if you make this a part of your budget as an early part of life, it just stays with you. And as your income goes up, presumably throughout your career, maybe keep the percentage of money that's going into it the same. So maybe starting out, you're only making $1,000 a year in this first job, kind of part-time towards the end of college, for example. So 10% is $100 a month, but maybe you have low living costs. But then you get the full-time job offer. Now you might be making $3,000 a month or like $5,000 a month, $60,000 in gross annual income. If you can bump that 100 up to 600, just keep the same percentage and do that consistently. I think people just need to direct that to go into a programmable investment, and it accumulates over time. If they don't do that, I just found that it disappears.
Well, this has been a really interesting conversation, Henry. Before we jump into the rapid fire and close out this episode, is there anything we should have hit on?
Let's see, I'm getting real nervous about the rapid fire. So you've been scaring me about this for a month, but I would say the one thing to hit on is that, just understand that maybe the things that we did in the past won't always work into the future. And I think that's been true in almost every realm, but maybe like your long-term investment strategy, what's been true for many, many decades has still continued to work. It might be the last shoe to drop. I think the way that we approach a lot of things in our life have changed. And I think investments are just a little bit behind the curve on that, but maybe it's time to start thinking a little bit outside the box and just look at an account structure that allows you to go into investments. Your entire identity is built around helping people do real estate investing, and it's done things for you financially, professionally, and personally beyond what people can do, just kind of working that traditional 9 to 5 and putting a couple percent into the 401k and hoping that the match is there and betting on the S&P 500. So I just think that it's not that we didn't cover it. It's just that I'd probably reiterate that you just need to keep an open mind to investing in a different way. And I use the example of, let's say, since I've been out of college and kind of paying attention to it, right? I remember when milk was great, then it became an enemy. Soy milk was great. Now it's almond milk. Now I think it's back to regular milk. I just read that in the Wall Street Journal, but either way, but you could take anything else. Carbs were an enemy, then they weren't an enemy, but then we only ate meat and so forth. But things change, and things will probably change in the investment world too. So just keep an open mind and maybe look at investments outside of your traditional stocks, bonds, and mutual funds. If they're right for you, that's great. Get smart on it a little bit. If you decide that it is, then maybe look at the smartest account structure to hold that in where your money's already accumulated, which is typically the 401ks and IRAs. And that's where we come in at Rocket Dollar.
Well, I appreciate those last thoughts there, Henry.
Sure. Let's see.
What lie do investors often tell themselves?
One of them is that all investments are passive. I think that that's a real misnomer, especially in the real estate space. It's not passive income. You have to work. You have to work hard at it. You have to do your research on the front end. Then you have to go and close on that property. And then typically you're actually doing quite a bit of work to maintain that. So for people to say it's just passive mailbox money, I think that's a lie that people tell themselves as well. It's pretty active.
If you could go back in time and give your younger self a piece of advice, what would it be?
Probably to put away that $100 a month at a rate of 10% and keep that going throughout my career. So like most people that are middle age or older or at any point in age, you wish you'd started that earlier in life. So I'd probably say that's the biggest one. If I could go back and tell myself like a Back to the Future type of thing.
Do you have a book recommendation?
So I'm reading right now. I just read a book called Why We Sleep. So I just finished that one. That's my most recent one. I'm a pretty big reader. I alternate between physical reading and audiobooks because some of them are actually better from an experience standpoint. The one I'd recommend, and I brought a prop for that because it's actually going to help me start this year, is Matthew McConaughey's Green Lights. Is a great book in an audio format. He narrates it himself. And I know you've normally listened to audiobooks where it's that dry, drab, like sort of British monotone voice. Matthew McConaughey narrates the book and it's incredible. It's more professional development and how he lived his life, but it's more of a philosophy book. So the purpose of the book is that he's kept a personal journal for 38 years. And the book is actually the insights from his 38 years worth of journals. And it's a massive hit. I think there's something like 50,000 five-star reviews on Goodreads for this book. So
Well,
your
that's a new
audience is gonna be
recommendation,
familiar.
so I might have to check that out.
Yeah. He's local to my town. So my older daughter, when she was in elementary school, went to the same school as him and his kids. So we'd see him every now and then at some of the events. I don't know him. But again, it's probably not my normal thing. And I would say it's less of a celebrity book, a memoir, and more of a professional development and self-help book. But it's really good.
And finally, what strategy or tool have you implemented that has had the biggest savings of your time?
Just tracking. I'm a big tracker. I track a lot of numbers. So just the heart rate, what I eat, my workouts, and so forth. So that's a big one. I think I even saw that you had one of your other rapid fire questions was maybe like one of the quotes, and this is probably another one that fits in line. But just to offer that real quick, probably the most innovative business person in American history is Henry Ford. Because I think he operated in a time where just no one really thought outside the box, and there was not as much technology as there is now. But he kind of talks about whether you think you can or whether you think you can't, you're right.
Yeah.
So positive
That's
mindset.
a great quote. It does end up going all back to mindset and how you think things through.
Exactly. That's right. But, for me, what actually saves time? So you'd think that it takes time to stop, write things down and track things. But I've kind of found that trying to keep track of things in a quantitative, objective format actually helps me sort of like cut out the noise and stay a little more focused and know where the baseline is to make incremental improvements over time. So that's basically one of the things I do.
Well, Henry, this has just been fantastic. I'm going to point everybody to your website one more time. It is rocketdollar.com. Take advantage of that $100 discount using code REI25. Again, it's rocketdollar.com. Really appreciate your time today, Henry. It was great meeting you.
Glad to be on.